Good morning and welcome to the ADS Securities Markets Update. Beginning with the U.S. developments yesterday, there were a few economic releases which came in with mixed outcomes. However, the main story or the main focus was on Janet Yellen testimony. But first, let's look at the economic releases and then we'll discuss the Fed Chair testimony. First of all, the flash services PMI in the U.S. came in much better than expected, rising toward 57 in February, up from 54.2 in January, while the estimates it had been anticipated to rise slightly toward 54.5. And this is again the second monthly increase in a row and the highest since October of last year. However, the Richmond Fed Manufacturing Index came in with a notable disappointment and far away from the market expectation, as it unexpectedly declined toward 0 in February, down from 6 while the estimate or 6 in January, while the estimates or it had been anticipated to rise toward 7 or to stable or to remain stable at 6. And this is the lowest level or the lowest reading since March of last year. The CB Consumer Confidence Index also fell more than expected, declining toward 96.4 for the month of February, down from 103.8, which is basically also revised higher during last month, while it had been anticipated to decline slightly toward 99.6, and this is the lowest reading since December of last year. However, it remains of course near the highest level since the financial crisis. As for the Federal Reserve Chair or Janet Yellen testimony, in short, it was dovish, but at the same time it was balanced. At the beginning, the US dollar spiked across the board as Yellen noted that changing the forward guidance means that rates will rise at any meeting. However, this was a short-lived move and a short-lived statement, as Janet Yellen retreated back again and noted that the Federal Reserve can be patient in the beginning to normalize the policy, which means that it is unlikely that the economic condition will warrant any increase in the target range for the Fed fund rate for at least the next couple of meetings or FOMC meetings. Moreover, Janet Yellen also noted that it is important to emphasize that the modification of the forward guidance should not be read as indicating that the committee or the FOMC will necessarily increase the target range on the next couple of meetings. So we still believe so far that the Federal Reserve will not be able to raise interest rates or the Fed fund rate anytime soon, or at least in June's meeting, especially as the growth rate remains on the downside, in addition to the core inflation, which remains at 9 months lows at 1.3%. And it's hard to believe that the inflation will recover from now until June to more than 2%. In Europe, the Eurogroup finally announced that that a deal has been reached with Greece. However, the IMF said that the reform list from Greece is basically insufficient, despite the fact, or despite that the bailout program gives Greece some more time until June or until the beginning of the summer. But a political unrest is also likely in the coming weeks, as the Greek government retreats on its demand, almost on its on the full demand list. But still, this is a happy day for Europe. As for today, there were a few economic releases during the Asian session today from Australia and China. First of all, in Australia, the construction work done index basically declined less than expected in the fourth quarter of last year by declining by 0.2% in the fourth quarter, comparing to a decline of 2.8% in the third quarter, while the estimates were to decline by 1.2% for the fourth quarter. However, this is the third quarterly decline in a row not seen on a record. That's number one. In China, we finally had some good news. Basically, the HSBC manufacturing PMI came in much better than expected, or basically contrary to the market expectation, which posted the first reading above the 50-key level since October of last year at 50.1 in February, up from 49.7, while it had been anticipated to decline further toward 49.6. As for the European session today, there is only one economic release from the UK. First of all, the only economic release today is the BBA mortgage approvals, which is expected to rise again toward 36.2 or 36,000 in January, comparing to 35.7 thousand in December of last year, which would be also the first monthly increase after 6 months of consecutive declines. As for the U.S. session today, the Fed Chair Yellen will continue to continue her testimony, or the second day of testimony today. However, we believe it won't be that important after yesterday's statement. But we'll keep watching today the housing figures, as we'll be waiting for the new home sales again. which is basically is expected to decline by another 2.3% in January after a rise of 11.6% in February, which would be also the first monthly decline in 2 months and the biggest monthly decline, if it came in as expected, the biggest monthly decline since 2 months. Finally, the crude oil inventories may rise by another 3.6 million barrel last week after 7.7 million barrel the week before. The final thing that I have today, we'll look at gold, or the only technical chart that we have for you today is basically gold. Yesterday, gold went down again because of the Federal Reserve Chairwoman testimony at the beginning of it. Basically, we went down again to almost 1190, but at the end of the session, gold continued to go higher again and closed the day, which is the most important thing, that closed the day well above at 1200 and also well above the level that we showed in the past few days, which is 1200, the 61.8% Fibonacci, in addition to the trend line which lasted since November until today. So far, after the Chinese came back from the holiday, likely the Asian session showed some sort of a very high bid. So that's why gold continued to rise during the session toward almost at 1210. So far as 1200 continued to be, or to remain solid, or to remain intact, it is unlikely for gold to go even lower than that. And we keep our estimates, or we keep our outlook positive as far as 1200 remains intact. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching. See you once again tomorrow.